Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the EMA scalping strategy, which is a method designed to help you identify quick trading opportunities in fast moving markets. Stay with me until the end as I break down how it works, how to use it step by step, and the common mistakes you need to avoid. So, without wasting any much of your time, let's get started. So let's define this EMA scalping strategy. The EMA scalping strategy is built around exponential moving average. And this is a technical indicator that focuses on recent price data to provide a clearer view of market trends. For example, when the EMA is sloping upward, it indicates an uptrend, while a downslope signals a downtrend. Its ability to adapt quickly to price changes helps traders identify trends and potential turning points in the market. You can see the EMA sloping all the way down. Following the trend is a downtrend. Following this trend, you can see the EMA giving us the confirmation. And also, you should know that you can adjust the EMA settings. Like I'm currently using the 7 and 14 periods EMAs, like to make this 21 and make this 9. So these are shorter term moving averages and they'll be used for scalping. Remember, we're talking about EMA scalping, so it's advisable you use shorter term moving average, but a shorter one and a longer one, like 9 and 21, 7 and 14, and all of that. And you can see here the EMA starts sloping upwards, and you can see the bullish momentum entering the market. Goes on here, have this minor pullback, happens here again, and that just shows how you can use the EMA to track price. Additionally, the EMA often acts as dynamic support and resistance level. In an uptrend, prices may bounce off a rising EMA, while in a downtrend, they may struggle to break above a falling EMA. And you can see that very clearly here. This is the 9 period EMA, and you see price failing to break above this 9 period EMA, using it as dynamic resistance, failing to go above it, to break above it and maybe switch bullish. It just keeps failing to break it each time it comes back to the moving average. And that is the dynamic support and resistance level which I'm talking about. Let me look for a bullish example. You can see it the same thing happening here. Price failing to break below this level. I need a better example. Okay, you can see this one here, price failing to break below this moving average level. Price was just using the moving averages for dynamic support, failing to go below it. Now, that is for the EMA, using the EMAs as dynamic support. And scalping with the EMAs typically involves using two or more EMAs with different time frames. A shorter period EMA reacts faster to price changes and highlights short-term trends, just like the 9 period EMA which we have on, while a longer period EMA provides a broader view of market direction, just like the 21 period EMA which we have on here. And the 21 period EMA is the longer period EMA which we can use in scalping. So by observing how these EMAs interact, such as crossing over each other's or using for users dynamic support and resistance, and also price going above it or below it, we can be able to trade the markets and scalp using the EMAs. So this strategy thrives in trending markets where quick decisions are very necessary. It's scalping, so we are trading based on fast paced markets, fast moving markets. So let's quickly dive into the strategy. The first step is to start by setting up your chart with two exponential moving averages, just like we've done, the 9 period and the 21 period. It could be the 7 period and the 14 period also. Now, these two EMAs will help you identify short-term trends and potential entry points. Now, after you've set up your EMAs on the chart, I want you to go to the higher time frames, like the 4 hour time frame. When scalping, don't just scalp blindly. You need to check the overall market context. Are we bullish or are we bearish? So that you'll be able to align your trades with the higher time frame context. So the first step is to go to the 4 hour time frame and look for uh the sweep or the cross, moving average cross happening on the 4 hour time frame, and this gives us the insight that indeed price is we are bearish or we are bullish. For example, let me give an example here. We have this cross signaling bullish uh bullish crossover. This is a bullish crossover, and this signals bullish momentum stepping into the market. And here we have a bearish crossover signaling bearish momentum entering the market. Now, once we've spotted these crossovers, the next step is to go to the lower time frames. To go to the lower time frames where we had those crossovers. Remember, the crossovers in the higher time frame just signals that we are now bearish, but from a higher time frame context. Now, once we've seen the cross on the higher time frame, the next is to look for the cross also on the lower time frames. You can see the cross happening here on the 15-minute time frame. Now, once you've seen this cross, look also for candlestick patterns which you can use to place your sell entries or buy entries. We have this bearish engulfing candlestick pattern here. You can see that very clearly. So you could just look to place your trades. If you're trading based off price action, you can also see this FVG. It's an FVG here, which price later came back to fill it up before pushing all the way down. Have another FVG here, price came to fill up before pushing all the way down. We've talked about FVG on our channel, so I advise you go through our channel and watch the videos there. We've covered a whole lot of tips and strategies which can help you become better in trading. So once you've seen all these entries, you can just place your sales, just stop loss above that key level or above the swing high, whichever you choose. I would prefer to place mine above the moving averages, and your take profit could be at significant support levels like this one, or you could just target 1:2 or a 1:3 risk to reward ratio. This is a 1:2 already. Okay, this is a 1:3 at that support level. All right. And you can also continue. Remember, the overall trend is bearish, so you shouldn't be taking these scalps. You shouldn't be taking the counter scalps showing or giving us this bullish momentum or this bullish crossover. Why? Because the overall time frame, the 4 hour, the higher time frame is bearish, so you shouldn't take bullish entries. Now you have another cross happening here, so you could just look to enter another sell. You can see this bearish engulfing pattern also, so just enter another sell here. Stop loss above that high or above your moving averages. Take profits at 1:2. Remember, we are scalping and we are not just holding for the long term. Target key levels like this one, and this was a quick 1:3. So far, we've had two trades hit TP since we saw the higher time frame context for our giving us the bearish crossover. And you can go on. Remember, it's advisable to trade in bearish market conditions. You have another crossover happening here. So the next step is to look for indications that we are indeed selling. You can see so many rejection candles happening here, and also the final break of market structure and the close. So just look to take sales from this supply here, entry around here after that close, after that market structure shift. Our stop loss above that high or above the moving averages, and take profit at 1:2, 1:3. This is the third scalp that's hit TP ever since we saw the 4 hour. Also, it's important that you keep tracking your 4 hour. Are we still bearish? Are we seeing any cross bullish crossovers on the 4 hours? Remember, we are trading based on the higher time frame context. Now you can see a bullish crossover. We are not supposed to be taking bullish entries. We're supposed to wait for bearish entries. We have a bearish entry here, and we don't necessarily see any confirmation that we might indeed sell. So we just leave that out. You can see price almost gave us this three inside down candlestick pattern, but failed. This candlestick pattern failed to close. This third candle failed to close below this bullish candle. So that was enough indication that we might not actually be bearish here, or this bearish momentum may just be short termed. Then we now have another crossover happening here, have multiple FVGs which later got filled up, and the sell continues. So this is all about scalping using the EMA. This is the EMA scalping strategy. And let me look for bullish examples. Remember, we marked out a bullish, a 4-hour bullish crossover. So let's quickly go look at that. Now we had the crossover on the 4-hour happening somewhere around here. So the next step is to wait for a bullish crossover also on this lower time frame, which is the 15 minutes. Now you can see that happening somewhere around here. We have multiple bullish crossovers happening here, but this was a ranging market. So so we had one final bullish crossover happening here. At the same time, we have a bullish engulfing candlestick pattern there also. So our buy trades would be at this next candle's open, stop loss below that bullish engulfing, riding it all the way to the top. And we have this bearish crossover happening here. Remember, we shouldn't take that sell. Always maintain the higher time frame context. Then we have the bullish crossover again almost immediately. We have several candlestick patterns here indicating that we should be looking to buy. So we just place our buy entries and next candle stop losses below that low or below the moving averages, and another quick scalp all the way up. So it's very simple. It's very simple. I would advise you study and study the chart backtest with this strategy, and wait for your comments. Come back to this video and share your comments so that other traders can learn from you, and I want to hear about your experiences also. So if you found this video helpful, don't forget to give it a like, subscribe to the channel, turn on the notification bell so that you won't miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.